Hello investors and future investors, welcome to the channel. For today's video, I'll be showing you how to use the long call option strategy in order for you to make huge gains. As per usual, I'll be giving you a step-by-step walkthrough of this option strategy, and most importantly, I'm going to show you how to use this option strategy in order to grow your small account portfolio value. Now, if you are new to options trading, or you're trying to use options in order to help supplement your 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'll be showing you how to implement the long call option strategy in order for you to grow a small account portfolio. For those of you who are new to the channel, I do specialize in helping you grow small accounts portfolio, not overnight, but over time. Now, you guys know how we do it. We like to go ahead and get down and dirty with options. Now, when we say we're going to get down and dirty with options, we simply mean that you will be getting a step-by-step walkthrough in order for you to be able to follow along with us. And if you do decide to choose to, you could go ahead and implement this option strategy in your portfolio. Now, as usual, I want you guys to focus on the option strategy and not the actual stock. The stock for today's video is going to be none other than Fiserv, and that ticker is going to be FY. Now, let's go ahead. We're going to jump into the Robinhood Advanced feature right here, so I can give you guys a little information before we go ahead and get into these option strategies. Now, let's go ahead to the 1 year outlook. Now, as you guys know, this is my preferred chart setup in order for me to trade options. Now, based on this chart right now, I'm going to highlight a couple of things. The number one thing is this blue line that runs right across here. This blue line is known as your 200-day moving average, and what the 200-day moving average does is that it tells us where the share price of this stock has been trading for the last 200 days or around 6 months. Now, for the last 200 days or 6 months, this stock has been trading around the $174 mark. So $174 price is the 200-day moving average. Currently, however, the share price to the top left here stands at $128.60. Now, the difference between the 200-day moving average and the current share price is going to be around $47. So that tells me right away that if this share price is going to move up, there's a very high probability, actual possibility even, that this share price can go back to the 200-day moving average because that's where it's been trading for the last 6 months. Now I'm going to go ahead and show you one last thing before we go ahead and jump into the options. So I'm going to go down here, and what I'm going to do, I'm going to go ahead and draw a trend line. What I'm trying to establish, I want to establish a very strong level of support. Now, based on the 1 year outlook, I can't establish a very strong level of support. So what I will do, I'm going to go ahead to the 5-year outlook. Now, with the 5-year outlook, I'm going to attempt to draw a trend line once again, and then now it's way better. Now, the support right here is going to be at around the $122 mark. Now, the reason why it represents a very strong support is that if you follow this trend line all the way out, you can see that the graph has touched this line multiple times. Once the graph touched the line more than 3 or 4 times, then that tells you it's a very strong level of support. Now, let's go ahead and get back into Fiserv so I can give you a bit more information. Okay, so here we are back on Fiserv, and what I'm going to do now, I'm going to give you some key information that you really need in order for you to go ahead and make an informed decision of what option strategies you want to go ahead and do. So, okay, so here we are on what's known as the key statistics, and this can be found in any one of your brokerage. Now, the one thing I want to bring to your attention is the 52-week low, which is going to be 117. Currently, the share price of 128.60 is trading way closer to the 52-week low than it is to the 52-week high. Now, when it comes to the 52-week high, the difference between the 52-week high and the current share price represents about $110 upside. So once again, the distance between the 52-week high and the current share price gives you another upside again of 110. Remember, the first upside we saw was between the 200-day moving average and the current share price. Now we're going to go ahead and go down. I'm going to show you if there's any more upside to this stock. So here we are on what's known as the research report, and what the research report shows us is the fair value. The current fair value that the analysts have come up with for this stock is around $198. So once again, the difference between the fair value and the current share price of 178 is going to give us a $70 upside. So this is the third instance where we see a upside from the current share price. So that tells me that this stock is severely undervalued. Now, lastly, one thing I want to bring to your attention, always make sure you know when earnings is before you go ahead and trade this stock. So this stock is going to be having earnings actually today. So what this does is that this helps you choose your strike date for whatever options you want to go ahead and do. Now let's go ahead and get into the options. So let's go down now. I'm going to go hit trade 5 options here in order for us to go ahead and open up the options chain. Now, for those of you guys that are new to options trading or new to the channel, all this information down here in its entirety represents the option chain. And what the option chain does is that it gives us enough information in order for us to make a very informed decision. Now, speaking of informed decision, before I go ahead and get into these option strategies, I want you guys to do yourself 2 favors. Favor number 1, always make sure to do your own due diligence before investing. What may work for my portfolio, quite frankly, may not work for yours. Favor number 2, always make sure to have an exit strategy before entering any options trade. That way, if the trade do decide to go tits up, then at least you know how to get out of the trade. And we will be covering exit strategies in this video. Lastly, these videos are merely for educational and entertainment purposes only. So here goes. So based on what I've seen before, this is the option strategy I will be doing with Fiserv, and I'm going to be going to buy, I'm going to be going to call, and I'm going to be choosing my strike date. The strike date I will be going with is going to be the strike date of, let's go with June 18th, 2026. Now, the reason I'm going to choose that strike date just for the purposes of today's video is that it gives me around 233 days to expiration. So this is known as the long call option strategy. The long call option strategy simply means that you're going to be buying a call at a further out expiration date. Now, the expiration date has to be less than 365 days. Anything longer than 365 days, then that long call has a different name. That's going to be a leaps option, but that's going to be for a different video. So now, with your buy and your call and your long call strike date, you are of the assumption that this share price is going to go up. And the reason for that is because the long call option strategy is a bullish option strategy. So once you decide to go ahead and get into this option strategy, you're of the mindset that this share price here is going to go up. Now, what we're going to do, we're going to go ahead and select our strike price. The strike price I'll be going with is going to be the $120 strike price. I did show you that the strong support lays around the 122-ish strike price. And since that's not available, I'm going to go ahead with the next best one, which happens to be 120 strike price. Now, I'm going to explain a couple of these things here for you before we go ahead and do this trade. Now, the next thing I want you to pay attention to is going to be this column here that says break even, and the break even here is $141.50. One of my subscribers asked me on one of my videos is that if I don't take the break even into consideration. Now, the break even can be taken into consideration if you're going to be using a different option strategy, or you're going to be holding this until or close to expiration date. Now, all this information down here is not used for every single option strategy. They each have their own different purposes. Now, with the 120 strike price, I'm going to go ahead, I'm going to select this here, and this is going to be the price I'm going to have to pay for this long call. Now, the reason I have to pay for this long call is because it's a buy option strategy, and as you know, if you're going to buy something, you're going to have to pay for it. Now, the price of Fiserv when you buy this option is going to be your 128.59, and this here is going to be your break even for this long call, because all we're going to be doing is just the long call option strategy only, and I'm going to demonstrate that as the video goes along. Now, before I go ahead and continue, I want to bring something else to your attention, which is going to be this column here, which is going to be your delta. So your delta here is going to be 0.65. Now, with the long call option strategy, your delta is of paramount importance. Let me show you why. The current share price is 128.59. If this share price were to go up to $1 and the new share price becomes $129.59, then this option contract here is now going to go up. It's now going to be $23.95. How did I come up with that new price? Well, it's quite simple. Whenever the share price goes up by $1, the option changes to by your delta. So if this goes up by $1, this option here is going to go up by your delta of 0.65. Hence, I got the new price of $23.95. So just to continue, so we're going to go ahead and pay $23.30 for this call option. Now, if you go ahead and buy this call option you have in your portfolio, and the next day the share price goes up by $1 and your new price here is going to be $23.95, then you could go ahead and close out this long call and lock in a $65 gain. That's how simple this option strategy is. Also remember, there are other Greeks that do play a role. Once everything else remains constant, then the only thing that's going to be added to this is going to be your 0.65 here. Now, how do you win with this trade? Before you enter into any option contract, I did mention this. You always need to have an exit strategy. So my exit strategy is quite simple. Whenever I go ahead and make 10% of my invested capital, I'm going to close out this trade. Here, my invested capital is going to be $2,330, which is going to be your 2330 multiplied by 100 shares. Each option contract has 100 shares, so we're just going to be doing one contract. So in order for you to do that, you could go ahead and use this chart right here that Robin has provided. What I'm going to do now, I'm going to move this chart and I'm going to show you the price to the top here. This is going to change as well. So all I'll be looking for is around $233 move. So let's go ahead and, okay, so this is going to be close enough. So at the $145 mark, as you can see here, which is going to be a 13.2% upside, I will be able to materialize my gains of 10%. At that point in time, I'm going to look to go ahead and exit this option strategy. I'm going to lock in my $200 gain, and then if I so choose to, I'm going to do three things. I'm going to rinse this option strategy. I'm going to repeat this option strategy. I'm going to keep locking in my investment gains. Now, you, for instance, let's say you wanted to do a nominal increase. So let's say you want to close out this option strategy whenever it's up $500. Then this is what you do. You can do the exact same thing, but now you're going to be looking right here for $500. Let's go right here. So now my profit target was only a 13%. A 500 profit target is going to go up to a 15%. So remember, the more profit you're going to be looking to gain, the more the price has to move upwards. Now, for those of you that work a regular 9 to 5 and you're not able to manage these trades, I'm going to show you how to exit these trades, and you don't even need to be by your computer. So the price we got into this long call is $23.30. So now you have a long call in your portfolio. So now you want to exit the long call at a $500 gain. So this is what you do. Once you already have it in your portfolio, you're going to go ahead and do a stop order, or you're going to close out the trade. So now you're going to do the same thing. You're going to go to the opposite of what you did to get into the trade, which is going to be sell. Then you're going to maintain your call and you're going to maintain your exact same strike date. Now, if you already do have the long call in your portfolio, once you open up the options chain, you're going to have an option right here to close off the trade, because Robinhood makes this super simple. If you don't have that, then you could go ahead to sell, call your exact same strike date, and you get the exact same strike price. Let's go ahead. We're going to select that. We're going to hit continue. Now, as I mentioned, you want to exit the trade when you have a $500 gain. So what you're going to do, you're going to put your one contract here and you're going to change your limit price right here. So a $500 gain is going to be representative of a $5 increase in your options. So the 2330 right here, you're going to add $5 to it. And this price here is now going to be $28.30. So you're going to put $28.30 right here. And there you have it. You're going to go ahead, you're going to execute this trade. So now you have your long call in your portfolio, and now you already close out the trade for a $500 gain. You don't have to worry about this anymore. The only thing you really have to focus now is just the time. So if you want, you could go ahead and do a simple calculation, subtract this from the price you paid to get into it of $23.30, and that's going to give you a $500 gain. So there you have it, investors and future investors. That is how you use the long call option strategy in order for you to make huge gains. Now, with the long call option strategy, the most important thing is going to be your time. I personally don't do these types of long calls anymore. I usually go for longer expiration dates because I like when time is working on my side. So the only time I would go ahead and do these short long calls, if you will, is if I expect the stock to have a drastic move to the upside. So in order for you to use these long calls and be successful, the one thing you want to do is make sure before you enter the trade, you have an exit strategy. Once you have your exit strategy, then you could go ahead and put your close order in and you just forget about this trade. So if you guys have any questions about the long call option strategy, how to enter the trades, how to go ahead and exit the trades, and even if you have any questions about how to find stocks in order to use this option strategy, then go ahead and let me know in the comments below. Now, for those of you who have made it to the end of the video, you guys are the real investors and future investors. If you have not already, now would be the perfect opportunity for you to go ahead and like the video, subscribe to the channel. Make sure you hit that notification bell to get an alert when I post a video. But most importantly, I do put this free content out there in order for me to help as many people as I possibly can. So if you guys know of anyone out there that's struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Together, let's help as many people as we possibly can start generating income from options trading. Now, until the next video, keep pushing your investments.